Hello and welcome to Scale by Design. Today we're joined by Mike, Benezra, and Noah Ente. Guys, welcome to the show.
Thanks for having us.
Thank you.
Yeah, for sure. So Mike, why don't you kick us off here with a quick introduction?
Sure. So I'm the general partner and founder of Erez Capital, which is a early stage venture capital fund in Boston, Massachusetts. I spent about 10 years in government, working for 3 governors, worked at the Israeli Foreign Ministry, started a nonprofit, and then launched Erez Capital about 4 months ago.
And I'm Noah. I'm 22, just graduated from the University of Michigan. Had career experiences in working for startups, backed by accelerators, VC funds. Also have worked in numerous capacities for VCs in Israel and the US, and I joined Erez Capital in October.
Nice, cool guys. So just starting out, that's awesome. Congrats.
Thank you.
Nice. And so I'm kind of curious, just like before we jump into some deeper topics related to market trends and things like that, what was kind of the motivation behind starting your own firm?
So GK Fund was a nonprofit that I had started to provide capital funding to BIPOC-owned startups, and I started it in the early, I guess the early months of COVID, and we raised close to $1 million and gave out $10,000 grants to different BIPOC founded startups. During that process, I met a lot of companies that I had wanted to invest in, but didn't have the ability to because of being part of the nonprofit. And also saw a lot of companies that had BIPOC founders who were totally undervalued and didn't have the same opportunities that other tech companies did. So after we raised the money, I took the opportunity to start my own fund. I said, I'm going to invest in what I want to invest in. I'm going to talk to founders that are interesting to me, and we're going to do this differently. And the first thing we did when we launched is we opened the door. So I put a link on our website that gave startups the ability to come in and actually submit their information. Venture capital firms typically don't do that because they'll get bombarded. But we actually took that information and gleaned a lot of insights out of it, which is why we're here today. And so that's kind of the model. That's how we ended up here.
So you're kind of using that as an indicator to market trends and where you're seeing a lot of entrepreneurs come up with new ideas. Is that basically the insights that you're seeing, or at least partially, from opening it up to allow people to share insights proactively on their companies?
Yeah, so we could have used our own networks exclusively. Like we have the Harvard network, we have the Mass Challenge network, we have the Israeli network. But we saw no reason not to open it up globally because you're meeting new people, you're learning new things. You might find a unicorn somewhere, and on top of all of that, if you can put it together and analyze it, you can find some really interesting trends, like you said.
Nice. Okay, good stuff. So are you like exclusively BIPOC community, or do you like also look at just
we look at all startups.
Okay.
I think the BIPOC community was my initial was my focus and kind of like my driver, but yeah.
Cool. Nice. Are you looking at any specific sectors right now, like in terms of that you want to focus on, or are there any like certain regions that you're honing in on, or curious to get your thoughts on where you're kind of focused on right now?
Noah.
Yeah, so our sectors of focus for the most part revolve around fintech, AI, machine learning, Web3, and prop tech. That last one's we'll touch more on that later. But we've noticed some really particularly interesting companies there. But just based on trends we've seen throughout our careers and also in the last few years, that kind of those areas sort of seem to be where the future is headed in terms of the tech that we'll rely on in different areas of society.
Cool. Nice. Good stuff. So yeah, I think like let's jump into the market, because there's just a lot of stuff going on right now that I know like the VC community, like we're all monitoring that closely, and founder CEOs and pretty much everyone in tech is trying to slow down and figure out like which direction we're heading. You know, Sequoia's made official statements that, you know, they don't really expect an economic recovery to until 2024. You know, we're seeing, you know, certain sectors get, you know, hit incredibly hard. You know, obviously like tech sector in general. And then within that, you know, for instance, like there's certain sectors where funding is down significantly. I think fintech is seeing a huge hit right now. And then, you know, the players sectors that seem to be doing well, healthcare, I think is performing the highest right now. Climate tech seems to be doing well. Biotech seems to be doing okay. So curious to get your thoughts on like what you're seeing out there, what trends, and just talking with other people in the VC community, like what are people saying right now?
So the first thing I'll say is there's an inverse factor here, which is that when the market is poor for one particular sector, the companies go searching. And we're seeing that. So with the FTX scandal taking place, the just the volume of crypto, coin, tokenized companies coming through and applying for funding to us has just, it's gone crazy. And we're seeing that from all over the globe, from the UK to Africa to the United States. So there's definitely a relationship there. We're seeing a lot of Web3. Prop tech, we feel like is totally underinvested industry sector. People are tightening their wallets. In VC, they talk about dry powder. So right now, people are they're not spending money. They're not investing money in new startups like they were before. And tech valuations were already inflated before this crisis happened. So right now, sticking to fundamentals like healthcare, even like we would call prop tech more fundamental, is a safer place to be. Noah, what are your thoughts on this?
Yeah, I'd agree. I mean, in tough economic times, it seems like most managers and firms, if they do make any investments, will kind of double down on existing portfolio companies and provide them liquidity support, or if they kind of need to maintain their operations through some kind of capital assistance. But there's not, if you're an interesting company that maybe got started right at the end of kind of the era of exuberance, at that point, you're kind of struggling now if you're looking for capital when a lot of firms don't necessarily have it to deploy. So we think there's a lot of opportunities out there in the space for companies that maybe, you know, through no fault of their own, just kind of got hit with some bad timing.
Exactly.
Got it. So, hey, like you guys had mentioned FTX, a crypto. So I kind of like, let's dive into that because that's obviously big in the news right now. You know, FTX has been, it's like number one thing that I'm seeing is like the FTX death spiral, right? Like bankruptcy. And then, you know, you have like BlockFi and all these companies that are just like really just, I mean, it's just going to shit, right? So I'm curious to get your thoughts on like, if you have any perspective on crypto and like, do you see like a rebound and how do you think like that industry is going to rebuild from where it is now?
I think it's funny because if somebody would have told you that a sector is going to crash in 2022, they would tell you, okay, it must be housing, it must be something else. Or if I were to tell you that a sector did crash right now, like it's already crashed, you ask me which one. But if you look at just the sheer wealth destruction that has taken place in crypto, there has been a crash. And it's unfortunate because now you have people that are looking hindsight saying, should there have been regulation? Should there be regulation? But they knew what market they were playing with. And this is kind of the risk you take. Personally, I'm talking off the cuff. I won't invest in crypto ever again, personally. I think I have a better chance of winning money if I go buy a lottery ticket.
Well, wait, but like, why? Like, why not? Right? Like, because you could also take the perspective of like maybe, like in a crash or a downturn is when you really start to consider it because it will bounce back, and when people like maximum pessimism is when you look for opportunities. So, you know, how do you like come to that decision, right?
So I think somebody who focuses on like equities would say, well, we look at historical trends, right? What happened during the last market crash? With crypto, we don't have any of that history. We have no idea what's going to happen because there is no precedent for what's happening right now. And when the books are as cooked as they were for FTX, it just makes you wonder like what other skeletons are in the closet. I even followed this trend all the way down because I'm from Washington State. They used, I don't know if you heard this part of the story, they used this Washington State chartered bank in like Farmington. You got to look into this.
All right, I'll check it out. So what happened though? Like, so what? What's
They
the story?
basically what they did is they invested $11 million in a bank, I think in Farmington, Washington, which has 1,100 people. And the bank, it's a land bank. So they invested $11 million.
Well, what's a land bank mean? Sorry, I'll just ask that. I don't know what the hell that is.
Well, it's mainly for like in taking out like farming loans.
Okay.
It's for farmers, right? But this bank was created in like late 1800s. It's in a town with dirt roads, and so they invested 11 million. Their total holdings at the time was 10. And here's what they did: they partnered that bank with a new bank called like, what is it? Moonride? I think it's Moonride Bank.
Something like that.
Something like that. And they basically turned that old bank into like some crypto fintech platform. It's insane. But
Yeah.
basically they wanted access to the Fed. That was the idea, is to buy into a chartered bank that has access to the Fed. And the story just keeps going deeper and deeper. But you got to look into the Farmington piece.
Yeah.
But they were very clever in how they did this. But it's clear, it's crazy nobody caught it sooner.
Yeah, I'm checking it out right now. Ownership of U.S. bank raises questions. Yeah. Yeah. Stake in one of the country's smallest banks. Single branch, just 3 employees. No, not even like online banking or a credit card. And so what was the value add of them doing this? Like, could you just explain that to me? Like, what did this help them do by acquiring this bank?
So I think they were able to park their money there and basically gain what they were hoping, in my opinion, is they were hoping that if there was a fall, they would be able to cash in on some of the SEC and FDIC.
Oh,
Yeah. So now they're part of the banking system, right? Quote unquote.
right.
So there's a softer landing.
Right. So it's like almost like a loophole
Yeah.
that they're exploiting, right?
And that's despite the connotation of crypto from being kind of decoupled from the larger financial system.
Right.
Which is
Basically-
perhaps the biggest piece of irony in this whole thing.
Right. Because it's basically relying on regulation and systems put in place for traditional financing. Well, that's nuts. So yeah, like what is the future from here though? Like, and we could kind of change off crypto here, but I'm just like really curious, like what are people saying so we kind of understand like your kind of more pessimistic perspective on like this shit is just a roller coaster. I want nothing to do with it.
It's Moonstone Bank.
Moonstone, that's the one from like Farmington or whatever.
Yes.
Yeah.
FBH Corp raises 11.5 million in private equity funding from Alameda Research. This was a tweet that was posted on March 7th. It got 8 likes.
Yeah. Yeah, nobody gives a shit.
Moonstone Bank.
Yeah.
Moonstone Bank. There it is. So okay, are there any optimists out there that still see crypto as the future or like as a good investment? Have you heard that? And if so, like
Yeah.
what's their reasoning?
What I've heard is basically that the other tokens should go away because they're speculative and they're not tied to anything. They're not tied to any equities, or there's no traction. There's nothing there. You're just trading. You're trading a name. So anything besides Ether, Dogecoin, Bitcoin, and Litecoin should disappear. That's what I've heard from most.
And what are the difference between those and these other ones?
So what happened with FTX is they created their own coin, right? And
Mhm.
then people started buying that coin based off of holdings they didn't have. And then they started leveraging against those coins, which were backed by nothing. And then they started borrowing against those coins that had nothing behind them. So that, my friend, is a arbitrage. We have this like hidden thing. He told me right before he came on board, he was like, yeah, arbitrage. And I was like, dude, I haven't heard that word in 10 years. But that's exactly
It's a
what it was.
horrible buzzword. The
Yeah.
people who don't know what it means often apply it way too broadly. So I was just making fun of that.
Bitcoin will be around for sure. Bitcoin is going to be around. It's going to be.
And how, but that one's tanked too, right?
Bitcoin is tanked for sure, but Bitcoin, there's too much institutional support for Bitcoin already.
Yeah.
And at the very least, what's happening is the Fed is running a pilot right now to develop a public crypto token.
Mm-hmm.
And they're doing it with certain Fed governors around the country. And, so at the very least, Bitcoin will be there. People might migrate over if there's something that takes its place, but Bitcoin's it's going to be there.
Yeah. Yeah. I mean, that makes sense. Just to kind of shift gears a little bit, if you guys are you ready? Or is there anything else you want to say on crypto before we move on?
No.
You guys cool? Okay. Yeah. So
no more time.
What's that?
I said I think it's been given undue time in just like the general discourse around it. So
we've arbitraged
for sure.
Yeah.
Definitely. So just greater market trends. I mean, one thing that I was looking at was just the decrease in funding from Q2 to Q3, which is I don't know, 39%. So, but what's really weird about all this shit that's happening, I still think this is apparently the second highest year in VC funding of all time. From what I was looking at an article written by Ernst & Young and Crunchbase, verifying that. So I think it's just really weird to see. But then again, you have healthcare where in 9 months this year, they've already exceeded investment of the entire year last year. So there's definitely some winners in this market. But what is your take on the overall VC market and the state of the economy right now and how those two things are intermingled?
I think that it's interesting because I think some people are running away from equities into venture capital because equities are so volatile, and I don't blame them. I actually think in many cases, you're better off investing in early stage venture capital, looking for innovation, looking for the next wave of technology, because if you invest in some of these larger companies, you know what you're getting. And your upside is pretty much limited. If you invest in IBM, you know what you're getting. IBM they're not coming out with anything new. I mean, you're going to get a dividend, but don't look there for innovation. You need to look somewhere else. And so I think that's why people are going into healthcare on the venture side. I also think it speaks to what Noah said about putting money back into your portfolio companies. So I've already invested in this company. I already know I want them to be successful. I like their fundamentals. I'm going to go reinvest in them, help them grow, help them get through this. Or I could put my money in the S&P and, we'll see what happens. But there is no safe place to run right now. You can't run to treasuries. You can't run to gold. My wife, she likes purses. I said, maybe we'll just buy a bunch of purses. And she's like, don't tempt me.
Right. Yeah, that's dangerous.
And but yeah, what are your thoughts on this?
No, I think you pretty much hit all the relevant macro trends that are kind of contributing to what the market kind of looks like for VC. So yeah, I don't know, nothing too much to add.
I mean, it's I think too, it's just seeing the late stage companies just getting killed. I mean, I think late growth stage, right? Pre-IPO, I'm seeing them just getting fucking killed. And I mean, their funding is down significantly. I think it's 50% or more. So you're seeing less of these massive investments at late growth stage and, a lesser decline in funding for early stage. And I think it's even though the funding is down even for early stage, the amount of checks being cut is actually up. And so that's interesting. And, just from my perspective, from, hiring and, what I'm seeing across the board in our client base. For those tuning in, I own, like, we do recruiting for the tech industry. So, but what I'm seeing is that our late stage customers are like, they're just getting killed. They basically have churned at this point. The majority of our revenue is coming from early stage companies that seem to still be hiring. It's really interesting to see, like, the category leading companies that we're working with. They cut us, they cut like all of their internal recruiters. They're starting to cut like engineers, like, and they're building more like offshore teams in India.
Yeah, you're saying
It's
that.
Yeah, I mean, it's just wild, right? And then I'm seeing like companies like Prosus, which is a big international fund, just write huge checks to Indian-based companies to build go-to-market teams in the US. So we're seeing a lot of, and I think both ways, just a lot more like international investments, but a lot of money being poured in from international companies to building go-to-market. And so I think like one thing that I'm kind of like calling my shot on is, I think just based on the leads that I have coming in from international VCs and SaaS companies, that we're going to start to see more category leaders in the US market that are coming from overseas, because these companies are focused on growth, right? Like they're focused on going all out attack and go to market, versus a lot of these US firms are focused on, oh shit, we have to cut, our expenses by X percentage. We have to focus on these layoffs and severance packages, and then building international teams, and focusing more on these kind of board meetings showing path to profitability and how are we going to decrease churn. And they have all these fucking problems that are not growth focused. And then you have these internationally based companies that maybe have a tighter P&L, lower expenses, and they're more so focused on growth, getting these like huge checks. So I think that's a really interesting trend that I'm seeing, from where I'm sitting. And I'm excited to see how that plays out.
It's going to be very interesting. What you said totally resonated with me, because it made me think about like web development as a sector, right? So you work with a web developer who puts a website together in like 3 or 4 weeks, and it costs you like $10,000-$15,000, and it might go over budget. I saw this a lot with GK fund companies, small businesses. And then you meet like a venture studio, and they're popping up websites in like fucking like 25 minutes. Like, and they're gorgeous. Like, they're absolutely beautiful. They're slick. They work on mobile. I'm like, yo, like, honestly, if we're really going by like the market here, like these guys should put those guys out of business immediately.
Usually
like,
no code too.
No code.
Yeah.
Yeah.
Those are getting pretty good, man. Like
They're
all
really
those like
They're good.
WordPress and everything. Like you can pretty much do anything you need them to at this point.
I mean, and that's, what I've noticed though, is that those companies they're not reaching some of the smaller businesses in the United States. I have seen that. So I will talk about, if I meet a small to medium-sized business in Boston, the chances are they don't know about that venture studio. They may even have the money to work with them, but they don't know they're there. And so they probably are going to pay over budget. They probably are going to get a worse product. They probably are going to have to argue with one guy over a website and how it looks and the colors. And so like, I'm curious to see how long it's going to take for that innovation overseas to kind of reach Main Street here. Like, if it's going to drive prices down, I just hope it drives it down for the people who really need those lower prices.
Yeah. And like, I think too, just kind of, you touched on it, accelerators, right? Like, I think now more than ever, like they're gonna have a place in the market, and possibly even more founders are going to consider. I think that's just going to continue to grow. You got accelerators like Y Combinator, a bunch of them at this point, but and a lot of major universities, right, are starting to have accelerators. Like, in my neck of the woods, DC area, Georgetown has venture labs, and so they're kind of popping up everywhere.
I'm a mentor and a judge for a Mass Challenge,
Cool.
for the US Accelerator program. I'm also part of Our Generation Speaks, which is a mass challenge accelerator between Israelis and Palestinians. And
Oh, cool.
I totally agree with you. I think
Can you talk to me, like, after we like finish the accelerator? I'd like to slow down on that program, kind of double back to that,
Sure.
if you can. But like, just yeah, sorry to interrupt, but like,
Yeah,
yeah,
no,
great to
no,
get your
no.
thoughts on
No,
accelerators.
accelerators are,
Yeah.
I mean, they're critical. I mean, there are a lot of people older than us who are way more established who want to help younger people, and accelerators are a great way to make that happen formally. So they definitely have a place. I hope people don't look at accelerators for funding. That's what I'm hoping, because you're not going to fund them. Like, they're not there for that.
Right.
They serve a different purpose. But Mass Challenge is a great one if people are interested in looking into it.
Mass Challenge. So challenge, is that like a pitch competition, or like what's the challenge aspect mean?
Oh no, yeah, it is. Yeah, it's exact. Yeah, it's a pitch competition. They
No
have
equity.
no equity, right? No equity.
Right.
They have thousands of applicants. They have, Mass Challenge Mexico, Mass Challenge Israel. I think they're one of like the biggest, I think, in the world.
Yeah, they're a pretty large institutional accelerator.
That's
Mhm.
cool. So like, how's that pitch competition work? Because I actually, I'm a judge on the Georgetown's pitch competition, which kind of feeds into their Venture Labs program. So like, what do you guys, what do your entrepreneurs win if they win the competition?
So there's you're laughing. So there's like the $10,000, which is like,
Yeah, us too, for
I know.
Georgetown. It's like, it's 10 grand.
I started GK Fund and was giving away $10,000 to companies.
Right.
Like, I was like, don't go there and do that. I'll just give it to you. Like,
Right.
it's pretty. And then they're like putting all of their effort into it. They're like, I better win this prize. I'm like, oh Lord.
I mean, at least they get better at pitching, right? Like that's a good, and then like just, yeah, I mean, the confidence presenting, all that kind of, these are usually pretty young people, not a lot of professional experience. So there's like those good aspects. And like the judges aren't probably going to grill them as hard as like VCs, you know what I mean? Like it's more of like a supportive environment, like, hey, try this, say this, like,
Absolutely.
it's
like, true. It's true.
Yeah.
Right.
I think I've learned some of my decorum from that experience, because we've sat through some pretty awful pitches.
There's some good ones too, and every time there's a good one, you're like, oh yeah, this is a cool
It
idea.
stands
Like,
out.
yeah, it stands out because you go through like so many pitches where you're just like, why? What is this? Like, this is not a business. Nobody
We were
wants
talking
this.
about this today. One guy, I'm like, hey, can you? And he's like, hold on. I said, what do you mean, hold on?
Yeah.
Are you?
Can you
kidding
talk
me?
about this? Like, tell us about XYZ. Just wait. Like, if you have an investor on the line and they're potentially even at any point considering possibly making a investment or referring your company to someone they know or anything like that, if they want to see something, like, correct me if I'm wrong, you should probably show it to
I
them.
mean, Jesus, I was like, if I'm gonna hold on, it better be really good.
Yeah,
Like,
Yeah.
there better be a really good reason.
because the rest of the pitch was a snooze fest.
Oh, it was horrific.
Yeah.
Yeah. The worst pitch I ever, the worst product. Like, it was, so she's going up against people that actually had like innovative products, like software products and even services. Like, there was just a cool mix of different products, ranging in different industries that were pretty cool. And I think I misspoke. I think undergrad and graduate was segmented. I don't know why I thought it was combined. I think we were just like on different nights, so it all blended together for me, and I couldn't remember which was like the business school versus undergrad. But yeah, like it was like one of them was like a sweatsuit, like those workout sweatsuits.
That's the product?
Yeah, and why would you think that is going to be something that is going to be competitive at one of the best schools in the country?
I was shopping those on Cyber Monday sales last night.
Yeah, I didn't. Do people even use those?
I was just gonna say.
Yeah, no,
just
I didn't even know.
You
that-
get the
yeah.
good, you get the nice hoodie, the nice like
Right.
sweatpants, good for the gym, the grocery store.
I don't know. It was just ridiculous. She was like, I am gonna get it from like China, and we're like, did you even talk to like? No, like there was no like. You're just like, what the? It's just such a waste of time, because like there was a bunch of CEOs on the panel, right? Like you had, like there's a big SaaS company in DC called Churn Zero. Blanking on the name of CEO, but he was there. I was there. There was like, really successful entrepreneurs on the program. But we were able to, like, that's where it's like one of those things, like we didn't even like provide feedback. We were just like, did you talk to anybody? No. Okay. Like 30 more seconds. Like, we have nothing. Let's just go. And then, but there was other ones where it was like, it was really good, and we were able to provide feedback. And what was cool is that when they make it to the next round of the pitch, they like incorporated our feedback, or, you know, where they were thinking about market validation, or they were thinking about pricing model, or, you know, they were thinking about a go-to-market strategy, or how to utilize the technology for maybe a different sector or a different size company or whatever it might be. It was cool to see, like, okay, not only do they have a cool product idea, but they seem to be coachable. And that's, you know, I think really important too, right? So it was definitely pretty cool to see, you know, the ones that were, yeah, obviously, you know, had some sense of business acumen. It was fun to kind of riff with them on how to make their products better.
It's really, really difficult when you're judging and you see a product that in a market that's just totally saturated. Like, I mean, it's not even fair. I mean, my first thought is, oh, nope. Like,
No,
I've
I
seen 1,000 of these.
dude, I like, believe me, there's so many companies I love in like the revenue space, like, you know, revenue enablement, revenue, like, integrations, like tracking data, efficiencies at scale that, you know, one SDR can get the results of 5. Like, I love all, you know, I have a lot of friends in that space, but I will tell you, like, when I go to like a CEO event or like an executive event, and or like even like a conference, and I walk up to a booth and it's like another revenue product, I'm like, no, like, I don't want to hear it. Like, there's like companies, and like they're the, you know how, you know, it's like, it's not going to be a big company, most likely, is like what they'll say, like, I don't know if this ever happened to you. Hey, have you heard of this company? Okay, we're like that, but for SMB. And you're just like, come on. Like, if your pitch is that you're like 5 other companies, then why? I don't understand how they get the VC backing, quite honestly.
Or you're like
you can
yeah.
you can drop the line now.
What line?
You can begin the boss.
Oh yeah, it's just it's just as much of a scam. You know, there's always the joke about companies that are pyramid schemes or whatever that give you the tools to be your own boss. It's like, it's just as much of a fairy tale as that. Like, if you're the Uber of X unrelated market or whatever it is, like, it's just, you're dropping any kind of like comparable business model that's at the extreme
Right.
end of what you can accomplish, and it sells an unrealistic dream to people that, for whoever understands the market, kind of knows it's not going to work out.
Yeah, so like I'll provide some content. Like, this is the biggest offender, and I'm not going to mention the name of the company. I will mention the name of the company they compare themselves to, and I guess people can read between the lines there, but I'm going to assume there's more than one competitor, so I'm off the hook. But you guys know, have you heard of Sendoso?
No.
Okay, so anyways, like, I consider them like a Silicon Valley sweetheart. Like, they really fucking crushed it. Cool. It's like a gifting platform. So like sales teams that want to, you know, send whatever, like, stuff to prospects or clients, like, they can use Sendoso. And you know, they're primarily mid-market enterprise at this point in time. And you know, their founder, Chris, he's an incredible guy. I had a chance to meet him. It was either at Dreamforce or SaaStr. I can't remember, but he, you know, he actually has like a sales background, and he ended up building more like a product company from scratch. And I think they, you know, are approaching, I think, I don't know, despite like in the current market, but as of last year, approaching like 800 employees. Just an incredible success story. You know, so it's really cool. But then I was at a booth and they had like a competitor there. And literally I was like, oh, so what do you guys do? Literally the first thing out of their mouth was like, do you know Sendoso? And I was like, yeah. They're like, we do that.
What? Wow.
Oh boy.
Jeez. I mean,
Yeah.
we've had some companies come in, they're like, guess what? We're the Shopify of India. I'm like, dude, but Shopify is the Shopify of India. Like, there already is a Shopify.
Yeah.
Like, what are you talking about?
Or we're the Venmo of, you know, X developing country. Eventually Venmo probably could be there, you know?
Right. They just decided not to go there because it's not worth the investment right now. I mean, that's like, you know, you're just basically picking up scraps of, you know, what the bigger companies aren't, you know, even going after. So it's like, you need a differentiator and some kind of differentiated value proposition, and a differentiated value proposition has to have some kind of moat around it.
Mm-hmm.
Like, if you have nothing proprietary about your value prop, I mean, I usually say like proprietary tech, but you know, something could be a proprietary tech, but if nobody gives a fuck about it, it's not worth anything. So I like to say proprietary value proposition, right? Because you have to have something that can't be replicated quickly, at least, so you can be off to the races. And like a lot of these companies, I don't think they don't have the differentiated value prop. They just have some like ridiculous, like, as you said, like region based, or like, oh, a different kind of market segment. But there's no differentiator. Like there's not like different product features because they're targeting SMB. Like it's just ridiculous.
There's some scenarios. The only exceptions I will say is there are some markets where there's no penetration from companies like PayPal, for instance, right? So like there are some countries where there's no mobile payment platform at all. And in order for that to happen, you need to work with vendors on the ground, and it like requires almost building that same model from the ground up. And so in some countries, you actually can replicate, like you could have a PayPal of.
It just has to be based in some demonstrable way on either like local laws.
Right, that's what I was gonna say. Like if there's like a
cultural expectations, there has to be something that you show like an understanding of that market and of the population who you want to be your early adopters. And then you can bring on those people because you have a unique understanding. If you're just going after a market because it has a high population,
right,
or because you see some opportunity, but you do nothing to differentiate yourself, you do nothing to kind of assure adaptation of your product, then it's
and
tough.
If you start the conversation with we're like, I mean,
we're like this, like okay,
and business plan already.
Right. And okay, so to be fair, like there are some differences typically in SMB products from enterprise products. I don't know if I saw it with like a gifting platform, but like for instance, in other spaces, I could see it where it's like, okay, SMB is going to be more out of the box, whereas enterprise is going to have more customization, different type of implementation process, better integrations, more visibility reporting, all this kind of stuff. I get that. I'm not really referring to that. I'm referring to like when, again, as we're saying, it's like there's no differentiated value proposition, and it's like the differentiated value proposition is really, quite honestly, nothing, right?
Yeah.
It's just like a marketing spin that isn't actually differentiated in how they're delivering the solution to the client.
Just a less capitalized version of the actual company.
Yeah.
I would never start off a conversation.
And yet, like, you find a lot of, I guess these companies still have backing.
Yeah, I mean, it is surprising. I mean, we read the VC newsletters, and
a lot of that's a product of there being a lot of money to play with over the last couple of years.
Yeah.
And also there's something I've noticed is like, especially a young person in VC, is that everyone has the desire, and this is true at the top and senior levels too, but there's always the desire to find the next big thing or the next whatever company it is. And in times where there's kind of more free-flowing capital, people take like bigger swings or more swings. And sometimes the larger funds really do throw 100 darts at the wall to see if 3 of them hit the right places on the board. But especially now in the current market conditions, or for a smaller fund, you have to do a lot more due diligence. You can't just like fall in love with the branding of a company and go from there. There has to be a lot more validation for not only the idea itself, but the product market fit and the founding team and the differentiation and barriers to entry and all these kind of things that are very key to assuring an investment is going to be a success to the extent possible.
Yeah, there's a situation where I met with a group of guys, former Google, Microsoft, product team guys, and they had a great idea, wonderful idea. I said, all right, have you guys incorporated yet? Do you have a name? Do you have, you have a website, pitch deck? And they're like, no, we'll get all that when we get it. I'm like, so what do you want me to do? I mean, how do I even invest in you? What do you want me to do? Venmo you would like the money? Like,
right.
Create a fucking company. Like,
right.
Cool, I can do that in 2 seconds. I said, well, then do it right now in 2 seconds if you want me to invest in. That type of mentality, that type of entitlement, like it's just not going to work anymore. Like people are really, they're really tightening up now.
The blank check days are over.
The SPAC days, the blank check days, those days I think are over for a while.
Right. And so just getting back to kind of follow up point, or I don't even know if this is accurate, but I kind of want to get your thoughts on it. So I'm wondering if like, these companies with no differentiators, right?
Yep.
Do you think that like maybe they start out with a differentiator? Where like this is a proprietary tech value proposition. We're
Sure.
gonna do XYZ solution, and then based on lack of product, so they get a seed round, right? Few million bucks or whatever it is,
Yep.
and they start doing more market value validation,
Mhm.
and they start to like, they're pushing for that product market fit, and they just don't get it. And so then it's like maybe they're pivoting into like a a product that's like just mirroring like the larger competitor. I wonder if that happens a lot, and that's a reason why we always we have so many companies that are basically doing the same stuff.
I think you're spot on there.
Yeah, agreed.
Yeah.
And a lot of it is people are afraid to fail. And I think if you're a good entrepreneur, you understand that you're likely to fail. That failing is like something you learn from and not a
Right.
character flaw, and doesn't mean you're not good enough, and doesn't mean that you can't be a good entrepreneur. It just means you haven't found the validation for your product in the market, and you either need to make adjustments or you have to start from scratch.
Well, yeah, I think that's actually really interesting, like to think about this, like why we have all these products that are very similar or the same. It's like, okay, so you start out with a unique value prop and you try to validate that it doesn't work. And then you're like, oh shit, I took this money. I have to try to find a way to get like some more market shit, like more revenue in the door. I don't want to, make my investors upset. Like this is my, for entrepreneurs, it's also like emotional. It's like your identity, right? And so you end up creating this like Me Too product that's just doing the same shit. And then it's like, when in reality, it's like that it probably make more sense to just shut down that damn business and try again. But maybe they're like, well, if I fail and I, waste investor money or it doesn't work, then am I really going to be getting able to get funding in my next thing?
Here's the real question.
Yeah.
What on earth are the crypto exchange companies that applied for funding from us going to do now? Because I already thought that market was saturated with Coinbase and FTX and Binance. Dude, how do you pivot from that? I mean, you literally are there to be a market for crypto.
Mhm.
And now people won't invest in the market. They won't invest in the company that makes the market. I mean, where do you even go from there?
Yeah. It makes sense to just like cut it when it's smaller
Shut it
versus
down.
like building these products that have zero differentiator, right?
Yeah.
And there are a lot of
Look
them.
for a buyout if if you have at least a customer base or something. Maybe
Right.
somebody
Maybe
could
that's what they're
value that.
looking for. Like that's the best case scenario at that point. It's
Yeah.
like you're going to be absorbed by if they even need you.
Maybe
Yeah.
if you like the domain name, or I don't know.
Right. Yeah.
I
Yeah.
like your logo. I don't know. I mean, it's
Yeah.
something. But these crypto exchanges, there are so many of them. I was shocked.
Mm.
And there are people that have money in them. Like I don't, the trickle effect from this FTX, not to bring it back, but the trickle effect from this FTX scandal is so fucking heinous and like pernicious. It's just, oh,
I
it's
know.
we're not even close to being done with it.
Yeah, dude. I'm following it and I'm gonna be looking this stuff up at least on a weekly basis because it's
But if
just kind of
Bitcoin falls below 10, I'm all in.
yeah.
Yeah, dude, fuck yeah. If it goes below 10, I'm like quadrupling down on it.
All right. Well, that's
Absolutely.
the direct opposition to what you were saying earlier.
Oh yeah, well if it falls
Well,
far
that
enough,
might be his
shit.
position. I don't know if it's the fund's position.
No, I'm not the funds position.
Yeah.
Well, you say, well, so Bitcoin is a little bit more validated. It has a little bit more like
For sure.
backing. People are starting to look at regulating it. It's like the go-to, like that's why, right? Like
Everyone's had a bad day, right? I mean,
Yeah.
every country's had a, every market's had a crash, every company's had a bad day, every person's had a bad day. Bitcoin's gonna have a bad day, and when it does, I will be there like the vulture that I am, and I'll jump right in.
And
Yeah,
first you'll say I told you so, and then you'll say, give me however many of these.
yeah. Where is it now? What's it trading at now?
16? Still
16
kind of a
on
bargain.
Tuesday, November 29th, 2022. 16.
Honestly, if you would have told me that it was at 16 like a year ago, I would have been buying like crazy right now.
Yeah.
Yeah, I mean, ultimately,
Oh shit, it's down so much, man.
where is it at now?
Well, no, now it's yeah, 16. You're right. And then it was at like a year, like at the beginning of the year, it was at 47. And 1 year ago, it was at 57.
Yeah.
Jesus.
Yeah.
So I guess at its peak, it was like 64. Is
Yep.
that right?
Yep.
And now it's at 16. Oh, that's an epic crash.
It's I mean, and it's just it's wealth evaporated. I mean, it's just the money's just gone.
Mm.
Like I don't even know. I've never seen money disappear that quickly before, because these crashes, they're like mini crashes, and they happen at night. They happen because it's open. It's not like the market, it's open 9 to 4, like or 9:30 to 4. Like this crash could happen any minute, and that's what makes it so vulnerable. But yeah, look, if it drops below 10, I'm going gangbusters on it.
Yeah.
Sure.
It's just funny. I remember like when it really exploded for the first time in like, I don't know, was it 2020 or 2021?
Mhm.
So I just remember that like there's all these articles coming on like about early investors, and basically like these people were considered gods, like, to have the vision and the insight, and maybe they are. I mean, the story isn't written yet,
Yeah,
Um,
until it became talking to a friend of a friend, and he's like, "Yeah, well, I got millions in crypto." It's like, okay,
yeah,
fine,
yeah. I want millions in crypto.
sure.
And well, anyways, guys, we're coming up on time here. This has been a lot of fun. We definitely got to keep in touch.
Yeah.
I just real quick, like if people want to find you, engage with you, like what's the best way to do that?
Yeah, dude, you can find us on LinkedIn, or you can go to our website at Erez, EREZ capital.io.
Got it. Okay, cool. Good stuff, guys. Well, hey, thanks for joining me today.
Thanks for having us, man. It was a great time.
Yeah, for sure. And if you're ever down in the DC area, hit me up. We'll go out. Or
Sure.
if I'm in Boston, I'm gonna let you guys know too.
Yeah, let us know.
All right, cool. All right, guys. For everybody tuning in, thank you for joining us, and we'll see you next time.